Hello everyone and welcome back to the Velocity channel, where we are going to show you how to pay your car loan from your credit card. Yes, it is possible. Yes, people are still doing it. That's right, still doing it. And yes, you can do it too. And you can increase in cash flow and eliminate that debt much faster than if you were going by the traditional banking system. Before we get into that, I'm going to need you to like, share, and subscribe, because everybody needs to know how to increase their cash flow, eliminate their debt, build their wealth at the same time. Are you ready? So let's get into it. Listen, I know how crazy it sounds. I know how strange it sounds. Why in the world would I tack on another debt, right? Car loan, pay my car loan with a credit card. What if I'm already having trouble paying the credit card? Listen, folks, we want to eliminate the wrong thinking that the traditional banks have told us, all right? First, before I do that, I do want you to know I still care about your credit score, guys. I still care about your credit report, all right? And so we want to educate you first on the credit score. And remember, your credit score is going to be determined by your what? Credit report. So let's go ahead and get into that just really quickly here. We know the payment history is going to account for 35% of your credit score. Credit utilization is going to be 30% of the credit score. Length of credit history, right? Why in the world would you cut up your cards and close your accounts? Okay, when part of that score, 15% of it, is going to be determined by that. Types of credit used, 10%, and new credit, that means recent credit inquiries, it accounts for 10%. So what I wanted you to do, I wanted you to look at your situation and think, man, you know, what am I supposed to be focused on first? And foremost, payment history and credit utilization. That's a good place to start. Okay, without further ado, let's go ahead and get into how to pay that car loan with the credit card. Here we go. Now, another thing that we need to remember, right, when we're paying our car loan, when we're paying our mortgage, when we're paying anything with a credit card, all right, paying any loan with a credit card, we need to remember these two words: Discover and Mastercard. Discover, Mastercard. Why do I say that? Because it seems like these third-party credit card companies that you can actually pay with your credit card, even though the electric bill, right, or there are other companies that don't necessarily accept credit cards, you can pay through this third-party company. Some of you already know what I'm talking about. And they will accept all the credit cards. Now, there have been issues where, hey, the mortgage company's not going to accept it, right? From Plastique, let's say, or from Tio. But they will accept if you pay with what? The Discover or the Mastercard. They won't accept it if it's Visa or American Express or maybe another credit card, but they'll accept it when it's Discover or Mastercard. So you may want to go ahead and reprioritize these two cards, the Discover and Mastercard, when you're dealing with the third-party companies, okay? That Plastique and Tio. Make sure you get those on board or in your portfolio when you're talking about paying with the credit card. And just another note, we want to make sure that we show you the transaction fees, at least for one of these credit card companies. Check this out. So, $1,000, let's say, you got to pay $1,000, and it doesn't matter if it's going to the principal or perhaps that's a monthly payment. We want to let you know it's 2.5% each transaction. So that's the transaction fee. And a lot of you are like, man, my goodness, why in the world would I do that? You know, it's another fee, CJ? Another fee? Well, wait a minute. Look at the fees that you're paying and the fees that you're going to pay if you were to do it the traditional way, all right? It's just 2.5%, which is just $25 per $1,000 transaction. So it's $25, folks, and you're getting, look, you are having the leverage of that $1,000 able to pay by your credit card, right? Not having to dig into your checking account, not having to dig into your savings. You're paying by your credit line, which should be your new checking account, okay? Remember where the income is going to be coming from. Listen, whether your income is $5,000 or $3,000, what is it that really matters? It's what's in between, okay? Listen, let's subtract the income minus, let's just do this, 3K, right? Minus 2K. All right? You have 1K. That's what's going to be resting within your credit cards. You say, man, why is it such a big deal to be paying with my credit line? Shouldn't I just make sure that my checking account? Yes, you can do that if you'd like, but that's segregating your income. And we already went over that in another video on how segregating your income is why many of you are in the situation where you're in right now. You see, when you gather together all your expenses and you place them into one area, which is your line of credit, what that does is it shows you, okay, these are the expenses. Let's say it's $2,000, all right? The income's coming in. It's coming into the credit card. Do you need to pay your credit card's minimum monthly payment? Let's say it's $600 each month, a minimum monthly payment. Do you need to worry about that? No. You know why? Because when you transfer that income inside to your credit card, you've already paid your credit card. Does that make sense? And so now you can reprioritize and say, well, I still have expenses, but there's $2,000 worth of expenses. And I don't have a minimum monthly payment to my credit card. That's an expense I don't need to calculate for. Okay, but we do know that $1,000 each month is going to be staying or paying down that credit card. So let's say you got a $12,000 balance, right? You're going to have the $1,000 there, right? Now, how long is it going to take you to pay off $12,000? Remember, you don't have to think about it anymore because you're using that same credit card as your new checking account. So it's $12,000 divided by 1,000, which is what? 12 months, which is a year, right? Some credit cards, they have you paying it off in 4 years. Huh? No, not us, because we know how to pay it down. Okay? You're paying way over the amount that you should, okay, on the credit cards. Why? Because you're placing your income inside of that. And this is something that the credit card companies, they're not really privy to that. They're like, whoa, you're placing $3,000 each month into, how are you doing this? Because I'm velocity banking, because I'm leveraging my assets. Yes, your credit card is an asset. That's how you turn your debt into wealth. So to answer your question, all right, you're going to be doing either the Discover or the Mastercard. You're going to let the lender know. Now you're going to ask your lender, hey, do you accept this? All right, because every lender is different. Once they say they do, you're simply going to leverage that. You're simply going to pay as another expense each month, right? Each month. Keep on paying that auto loan, right? That auto loan each month. When the card fills back up, or when it's to a sufficient level for you, let's say it gets to $5,000, guess what you can do? You can use that $5,000 to, that's right, go to the principal of that car loan. These are the two things that you need to be concerned about, okay? Remember the principal, chunk that principal. Because when you're chunking away that principal, you're chunking away the interest. And you not only chunk away the principal, but you're actually utilizing your credit line as your new line of credit. Now, as your new checking account. Now, if you don't feel comfortable using that, go ahead and do a little bit at a time, okay? You do a little bit at a time, whether it's $700 and your minimum payment is $500 or whatever. All right, folks, thank you so much for tuning in. Just let me know if you have questions and we'll go ahead and answer them for you. God bless and have a good one.